How to pay off student loans and mortgages faster. Struggling with student loans or a mortgage? You're not alone. Today, I'll walk you through simple, research-backed steps that can help you pay down debt faster, whether you live in the United States, Canada, or Europe. Let's get started. Before you put money toward any debt, check 3 things. First, your interest rates. Second, whether any loan charges a prepayment penalty. And third, whether you qualify for relief or assistance programs in your country. These 3 steps will help you avoid mistakes and choose the strategy that saves you the most money. Here's a simple plan that works almost everywhere. Step 1. Build a small emergency fund. Just $500 to $2,000. This prevents you from borrowing again when something unexpected happens. Step 2. Always make the minimum payments. Missing them can damage your credit and add fees. Step 3. Choose your payoff strategy. The Avalanche method targets the highest interest rate first. It saves the most money. The Snowball method targets the smallest balance first. It builds motivation. Pick the one that helps you stay consistent. Step 4. Reduce unnecessary expenses and move that money to your target debt. Step 5. If possible, refinance or restructure loans, only if it lowers the rate and doesn't add large fees. And Step 6. Automate payments. Automation keeps your plan on track with almost no effort. Let's look at student loans. The rules differ depending on where you live. If you're in the United States, check whether your loan is federal or private. Federal loans may offer income-driven repayment plans or forgiveness programs. These can reduce payments if your income is low. For private loans, refinancing may help, but only if you get a better rate. If you're in Canada, the government offers the Repayment Assistance Plan, known as RAP. Depending on your income, your monthly payment may be reduced, sometimes even to 0. You can apply online through the Government of Canada. If you're in Europe, student loan systems vary. Many countries offer low-interest or income-based repayment. Check your national student finance authority for the latest rules. The key idea is simple. Know your options before choosing your repayment strategy. Now let's talk about mortgages. Start by checking your interest rate and your loan term. Then ask your lender if your mortgage has a prepayment penalty. This is important before making extra payments. 1 extra payment per year, or rounding up your monthly payment, can shorten the loan and reduce the interest by thousands of dollars over time. Another option is refinancing. If you can get a lower interest rate, refinancing may reduce your monthly payment or help you pay off the loan sooner. Just make sure the savings are bigger than the closing costs. Finally, remember this. If your mortgage rate is low but your other debts are high, focus on the high-interest debts first. Paying off debt isn't only about math, it's about habits. Automate your payments. Use reminders for student loan recertifications. Track your progress monthly. Small, consistent actions lead to big results. Here's a quick checklist you can do today. 1. List all your debts, interest rates, and minimum payments. 2. Set aside a small emergency fund. 3. Choose Avalanche or Snowball. 4. Check whether you qualify for assistance or relief programs. And 5. If you have a mortgage, ask your lender about prepayment penalties before making extra payments. Thanks for listening. If you want more tips on personal finance and debt management, subscribe and turn on notifications. See you in the next video.